And then, but we don't know on Morgan Lewis how much they spent today? Do we know how much they, I wasn't sure if that was Dan's question or Harry's question.
We did receive that today.
You received an invoice.
We received at our request, as we did with Grassy, we got a run of billed and unbilled time, and I believe the number was $22,000, and the detail on that similar format, but in an email rather than a letter, is in Roland's possession as well as John's.
So, just asking one more question on this. So is that through April 30th, or is that through today? Either you or Roland?
I can answer that. Grassy was through the end of April, and Morgan Lewis, it's through today.
Okay, thank you.
Yeah.
Okay, I don't know if there are any other questions, comments. So I'll kind of jump in. First, I want to start with saying thank you to, John and Brad and Nisha, for all the hard work and Roland going into, trying to really crowd all this together and resolve a lot of the issues at Nathaniel Witherell. I know we're talking about a $530,000 transfer and a $920,000 interim. I don't want this to be viewed as being unsupportive, but, when I look at this information, I particularly think about, my desire to see a, kind of an internal CFO here, and given the run rate on Grassi, I would be more comfortable with an $890,000 appropriation instead of a $920,000, which effectively is taking a little bit of the Morgan Lewis conversation and then also kind of the run rate on the internal CFO and moving that effective number from 62,000 to 32,000. Something would make me more comfortable, and certainly an emotion I would like to make if I get a second. But otherwise, just supportive of the work that all of you are doing, and I don't want that to be viewed as not being supportive, but it's a number that I'm more comfortable with.
So, Dan, could you just give me the numbers again, because I'm a little confused.
I mean, I know we're going to vote on these separately, but I would be looking, there's a $920,000 interim appropriation. I would be looking to make that number 890, and then, not make any changes to the transfer, so.
And are you, I just want to understand this, are you directing this or dividing it down to be either?
Yeah,
I'm going to say, I probably will second it, so I just want to make sure I know what I'm seconding. Are you going to take this down to the level of Grassi or Morgan Lewis? Because there seems to be a lot of other things in here, too.
What I would say is I think that, my intent is that I would prefer not to pay for full-time interim CFO when I'm hoping to get a full-time internal CFO, but I would not limit where the money could be spent. I mean, I think that ultimately, I think John and Brad would, what I would see is it would be a 30,000 reduction in appropriation, and how they manage that within their budget. I don't want to, I don't want to reduce flexibility any more than it needs to be, but that's how I would think about it.
Point of order, may I just for a moment? First of all, have we moved both NW3 and NW4?
Oh, no, I'm not,
Yes,
I'm
he
just.
just moved it.
Those items.
No, we only moved the first
So
one.
this now is a motion to
Only
amend?
three. We only moved three.
Wait a second,
No,
I'm
you gave your
confused,
report on both.
because I gave my report on both,
both.
and I asked if they were both moved, and the answer was yes.
No,
But they weren't.
no, only one was moved.
So you're going to have to hear my report again, Jeff.
Okay. I'm just trying to, we're having a conversation. I'm just trying to kind of communicate where I am. But I agree, Jeff.
Threatened again.
I agree, Jeff. I should not have asked for a second. I was just communicating where I am. So with that comment that I made, I think it probably makes sense to, unless there's any more comments on NW3, we should probably vote on that. And then if I have a motion on NW4, I can do that. Brad?
So,
Thanks. I just want to say, I don't take it as unsupportive at all. And hopefully, because each of these numbers, each of these pieces and parts represents what it might be, but these are not fixed numbers. We're paying by the hour, et cetera. Hopefully, we would come in significantly under the 890. So I just want to be clear, it's not taken by myself, by the board. I know I can speak for John also, that it's not taken as unsupportive. My only request would be, whether we need to come back or not, it would be, I think, useful for us to come back a month from now, give you an update on where we are, give the full BET publicly an update on where we are, and update some of these numbers so that everybody feels comfortable that they understand what we're doing and how we're using the flexibility that you're proposing to give us.
Thank you. So if there are no more, is there no more discussion on NW3? Can we?
Yeah, me.
Leslie?
I'm sorry, may I
Yes.
speak, please? I am now getting a little confused because I've been looking at the sheet and maybe I don't have the most current one. But is there money in here, which didn't come to the budget committee, so for a repair to whatever it was, the drain pipe?
The drain
And which
pipe-
one is it? And can you just tell us what the amount and the status of that, please?
Yes. So the drain pipe, excuse me, which is in the kitchen,
Is that NW3? I just want to make sure, because it's not clear to me, at least on the sheet that I have. Because we've now divided NW3 and NW4, so if it's an NW4, we have to wait.
It's NW3. It's reflected in the maintenance figure, which is less of a transfer than what we had discussed
you.
at the Budget Committee. At the Budget Committee, we were talking about a $100,000
does it
transfer.
say
Now it's
maintenance?
80, reflecting the $20,000 estimate for the drain pipe.
No, it says 2.
right,
That's
so
where it's
the
from.
masonry wall ended up being about $4,000, and the drain pipe repair ended up being $15,000. So just under just about $20,000.
Okay, thank you.
NW3? Do we want, any objections to accepting that, or should we do a roll call?
Well, I am continuing to be confused. Your amendment to the motion
Forget
is
my-
on NW4,
No. it is
not
No,
NW3.
No, my amendment was just a conversation. I have no motion. I'll make that on NW4 on the interim.
We're on NW3
Three,
at this
correct.
time.
Okay. So why don't we do a quick roll call, Nisha, on this? NW3, transfer.
Motion has been made and seconded to approve these transfers. Oh, sorry. Who has made the motion to approve?
Dan made the motion and Steven seconded.
And I
it.
oh, yes, Steve.
Steven seconded, yeah.
Sorry, thank you.
Okay, Harry, let me start with you.
Yes.
Laura,
Yes.
Karen,
Yes.
David,
Yes.
I'm a yes. Dan,
Yes.
Leslie Tarkington,
Yes.
Leslie Moriarty,
Yes.
Jeff Raymer,
Yes.
Bill Drake, Miriam Cruiser.
Yes.
Steven Sills.
Yes.
It's 12-0.
Thank you. Okay, next item is, so that passes 12-0-0, thank you, NW3. Next non-routine application, NW4. Can I get a motion?
I'll move it. Second.
Leslie Moriarty, second Leslie Tarkington. This is an additional appropriation of $920,000 from Nathaniel Witherall for professional fees. I would like to make a motion to reduce that number to $890,000. Can I get a second?
Second.
Okay, Dan Ozesmere, second Leslie Tarkington. Discussion, I think I made the, argument previously, so I won't repeat it. But generally, just a view that, with, in terms of the internal CFO costs, I hope would be a little lower. And I also acknowledge that many of the others are kind of costs are defined to be worst-case costs. So I do feel that hopefully 890 will be adequate. So any discussion on that?
Yeah, I mean, I think I'm inclined to oppose this. I think the management is class act. They said they don't really care if we do this, or they didn't quite say that, but they understand the logic here. My view is that management is extremely conscious of costs, will manage this expense line in the appropriate way, whether or not we micromanage it by this reduction, which passed at the Budget Committee. And so I'm inclined to, support management's ability to manage. So I'm opposed to it, knowing that they'll manage this to the lowest cost possible.
Thank you. Any other comments, Karen?
Yeah, I would just add that we have additional information than they had at the budget hearing, so I would be supporting this.
Thank you. Laura?
I mean, I do believe the statements that were made here that, part of this exercise was to look at what would be the range of expected expenses, knowing that we're coming to our year end and we don't want to, we want to do the interims on a timely basis. So I fully expect the management team and the board will manage the expenses appropriately. And I frankly would expect them to come under 920 necessary. I will say I'm a little bit concerned about, I don't know, the assumption about the timing and the process of onboarding an internal CFO candidate. I do think, we're going to need Grassy to hang around for a while. We have the zero-based budgeting exercise still to do. We certainly we'll need their help on the June 30th, 23 closure of the book. So I don't think there's going to be a switch, turn off and on. I think we're going to need Grassy for a little while. Respectfully, I understand your point. I hear where you're going. Because this is an interim, I don't know if you'd consider conditioning the 30,000, so they would come back to us and not have to potentially have a special meeting of the RTM to deal with it if they do need it. Your point is well taken. I'm just from a process standpoint and where we are with the end of the year, I wonder if you'd consider some flexibility.
Karen?
Just to follow up with what Laura just stated, they have budgeted for the zero-based budget development at 33.5, so.
Right, so what I'm saying is, I wouldn't expect, even if we do get an internal CFO candidate to be onboarded and up to speed, I don't expect Grassy to, they're still going to do that project, I would think. We need them for that.
Yeah, and that's been budgeted, so that's in their number.
But now we're talking about reducing it by
Yeah.
Well, no,
30,000.
there's 62,000 for an interim CFO. We're saying we're reducing that by 30.
And I'm saying I'm not comfortable with that.
Leslie?
I just wanted to add that the 990 also includes other items that they talked about that they're working on, including the dietary. And there's, given what we read, there's uncertainty, right, in how well the requested changes will work. And clearly, service levels are critical, that you're going to need to do what you need to do for your residents. So I'm just, again, I'm concerned that they have sufficient funds to attend to what they need to perform. I do believe, that they are very cognizant of expense control, especially in these areas. You're not talking about a lot of money, but also if they end up needing that $30,000, it really handicaps them.
Okay, so I'll just make a comment. First thing, we are talking about $30,000, so I don't want to take up too much of the board's time. I would just say, that, we have more, I think the board and John have more information today than we did a week ago. We have a run rate of Grassy of, 12 and a quarter. This would basically make it 16,000. So, and we already have zero-based and all these things already funded and itemized. So, I might even take the view that if we all knew what we knew today, the request might have been 890 instead of 920. But again, I really don't want to waste too many people's time here. So I would be happy to do this as a condition if it will get broader support and we can move on and get to the rest of our agenda. Okay? So can I, would you withdraw, withdraw the motion?
You
The
withdraw
amendment?
the motion?
The amendment?
Yeah, sure.
Okay. And I will make a motion to condition $30,000 of the $920,000 appropriation released upon, further detail on, Grassy's fees and understanding of what they are doing versus what our finance department is doing and where we stand with an internal candidate, internal CFO.
May I just add that?
Who seconded that?
I would, no, I
Leslie,
was
yeah,
second.
go ahead. Okay.
But can I just?
Yeah.
Should we include also invoices in the discussion from Morgan Lewis? So it's just, it's both of them, which I think have been the topic of the discussion? Or no, you want to keep it
I
to
think there may be
Grassy?
executive session stuff there. For 30,000, I keep it
Okay, fine.
simple for
That's fine.
Grassy. Okay.
I second it.
Okay. And any comments, objections? So, yeah.
I'm not opposed to the idea, but it wasn't individual has to meet to satisfy the condition? What are the deliverables that satisfy?
I mean, I think I said that, but if Brad wants to clarify his understanding, it might help us.
Yeah, I think maybe a path to success here is, if it's all right with your board, regardless of whether we need the 30,000 or not, we will come back in a month, give you a report, similar format, an update on our progress in these matters that have been discussed tonight. More detail, we'll have another month, roll forward on actual versus potential projected fees. I think that might be something that would be in everybody's interest.
Including
Jeff
invoices
and-
today?
Jeff and then Leslie.
Including invoices today?
Yes, just as we have with Grassy and with Morgan Lewis. And if you want more detail than what is in the two letters or the letter in the email that we obtained today in response to requests, we can do that with Grassy. I would just ask that the Morgan Lewis matter, since they're handling potential litigation for us, the detail of that be protected in an executive session.
Jeff and then Steve?
I'm sorry, I just want us to keep the process on track. We now have a motion before us to condition the last 30,000 of the 920,000, and the movement will articulate the condition one more time, and then perhaps we can vote on it.
The condition $30,000 based upon a receipt of invoices from Grassy, a better understanding of the roles that the external CFO will perform versus our own finance department, and also a update on where Nathaniel Witherell stands in hiring a full-time internal CFO. Those are the three conditions.
Thank you.
Does that answer your question, Stephen?
Yeah, that I think respectfully.
Thank you. Okay. Call the question?
Okay, this is
The
just,
vote on the amendment, right?
Amendment.
this is the vote in the amendment to condition the last 30,000. Okay. Harry, let's start with you.
Yes.
Laura?
Yes.
Karen?
Yes.
David?
Yes.
I'm a yes. Dan?
Yes.
Leslie Tarkington?
Yes.
Leslie Moriarty?
Yes.
Jeff Framer?
Yes.
Bill?
Yes.
Miriam?
Yes.
Stephen?
Yes.
12-0-0.
Okay, that amendment passes 12-0-0. Can you, please, can we now do Nathaniel Witherell 4? Can we approve that by unanimous consent? Any objections?
Yes.
As amended.
As amended.
I heard
Oh, you want a
somebody had
roll
an
call?
objection.
Would you like to do a roll call, David?
No, no, no.
Okay. Good. Okay, I think that passes by unanimous consent, 12-0-0. Thank you, gentlemen.
Thank you.
Thank you very much.
And thanks, Nisha, for all her hard work. I'm sorry not to see her tonight, but thank her.
She's at another board meeting.
Fantastic, thank you.
And I would be remiss if I didn't specifically call out Roland and Pete and thank them for all the help that they have given us through this transition.
Thank you.
Thank you to Brad Markowitz, who volunteers a lot of time on this.
Okay. Item 4, our assessors report. Thank you, Lauren.
Okay, good evening, Mr. Chairman and fellow members of the BET. I'd like to present the assessor's report for May 2023. The senior and disabled property tax relief application period ended today. Originally we sent out 191 applications, and to date, as of this afternoon, we have received about 210. I believe in my report, as of Friday, we had 206. So we got a couple more in today. Once you set the mill rate this evening, we will be able to determine the benefits and the credits that will be appearing on this July's tax bills for our seniors and disabled. Our income and expense forms were sent out to all property owners that lease their, commercial property owners that lease their properties. To date, we have received 193 back. There will be, they are due back to my office by June 1st. Litigation, we resolved 2 residential appeals this past month. As of Friday, we had 7 new tax appeals filed against the town on the 2022 grand list. The Board of Assessment Appeals sent most of their letters out, I believe, on March 13th. So any property owner who came to the Board of Assessment Appeals has 2 months from the time the notice was sent out to file. Bless you. And I believe that expired over the weekend, and as of today, I don't believe we received any additional tax appeals, but I'll verify that in my June report. So we've gotten to date 7 appeals against the 2022 grand list. Does anybody have any questions for me this evening?
Laura?
Thank you, Lauren. So I think this is a new chart on page, the 3rd page of your report showing the benefits for the volunteer firefighters.
Yes, actually, that's, okay, so let me explain.
Maybe
I
you
put
could
that
just
there
give a
for-
little intro.
Sure. This is, I don't have the 2022. This is for the grand list of 2019 to 2021. I put that there just for informational purposes, so. But the volunteer firefighters have to give to us by the month of April their amount of firefighters that are eligible for the credit. We can't do anything until a mill rate is set. Once you set, I'll have all the numbers for you next June. Next month in June, okay? But, so all of our benefits include firefighters, seniors, there's the local and the state, disabled, and there's also the co-ops in our local program as well.
So just as a follow-up, I know one of the concerns of this board is that this figure for volunteer firefighters has been declining. And we want to be sure that every volunteer firefighter is aware of this benefit, so.
The chief, I believe, or the deputy chief, puts the report together for us. If by chance somebody has missed their filing, we can certainly add them on at a later date through a certificate of correction. But we do have the list. We will be looking at the list once you file this, once you tell me what the mill rate is this evening, and we'll take care of it for next month. Okay?
Get a motion to accept the...
I so move.
Second, or move, whichever.
Okay. Jeff Raymer, second Leslie Tarkenton. Any objections to accepting the assessor's report? Okay. That report is accepted unanimously, 12-0-0. Thank you, Lauren. Now we have item 5, our town controller, Pete Minosky. Thank you.
Good evening, everyone. Controllers report. Start out with my monthly ARP monthly report, and it shows each month the cash balance declines, which is good news. We're at $16,277,000, and the interest earned continues to increase, which is also good news. Moving along, tonight is the culmination of the annual budget process where we set the mill rate and then we start all over again. One more comment and I'll open it up to questions is the RSM is trying the best to try to close out the audit at May 31st. But one of the conversations I had with Bill Lindsay, the financial analyst for the town, I was talking with Bill. We're working on the credit rating presentations for next year based on some of the outcomes of the current year. And we touched upon the debt policy and the fund balance policy. And we were talking generally about the debt policy and doing benchmark it, et cetera. But one of the comments he made was striking. He was at a bond issuance in another town, and 12 of his clients have not filed their audits. The bond counsel that was with him had 15 clients that had not filed their audits. The state of Connecticut is in the extraordinary position where dozens and dozens and dozens and dozens of towns have not filed their audits. And what came out of the conversation was, and this is not RSM, it includes the CLAs, et cetera, there seems to be a tremendous shortage of CPAs in the accounting world. So I just wanted to throw that out there, and I didn't want you to think that we're the only town out of the 169 that had not filed it. We do have one area that a qualification is that we did hold our books open for extra months to resolve the Nathaniel Witherall situation. We probably could have gotten through this in January or February, which was held back by GASB 87. But as of now, it looks like we're trying for May 31st. we will definitely be filed by June 30th. So I will take this opportunity to answer any questions in the controller's report.
Karen?
Pete, on the ARP funds, I noticed that DPW engineering and then the sewer division has a big chunk of change. Do you have any feeling as to whether or not they're on track to spend those monies, or?
It's a good question. I actually was going to make a comment, but I'll make the comment anyway because it goes into the July meeting. There's 47 accounts. The town of Greenwich is a recipient. Of the 47, 19 of them are sub-recipients. That would be tagged, all the ones down the top. They are fully expended or obligated, okay? They had till 2024. There's 11 accounts that have zero expensed. I'm not concerned because what we do in the bond world is when we have situations like if let's say hypothetically, you had a large capital project and it stalled, there was a legal issue or whatever, we have the ability to repurpose. So what would happen in this case is, I think we talked to this with Ms. Tarkenton, and we were going to discuss this at the July meeting. We're going to have to revisit these at some point, and then we're going to have to go back into the budget process next year for the 24-25, and make a determination of if some of these are not going to get off the ground or are not going to be done in a timely manner, we'll just simply have to repurpose them. We have to 24 to be obligated, and we still have time.
Yeah,
But
no,
you're-
I know we have time. I was just wondering if you had a sense of whether or not these projects are going to get off the ground or not, or.
I have a sense, but I've offered a solution. You know, it's something that could be easily resolved.
Laura?
I would just comment that in our liaison meetings, Leslie Tarkington and I certainly discussed this, and we've been given no indication that they don't think they can meet, the time requirements. But certainly it's something we keep tabs on.
And in fact, they've talked with confidence about meeting the deadlines. So, but I think our follow-up and continuing follow-up is critically important.
In addition to the ARP issues about expanding money, these are obviously very important, many of them very important drainage projects that, clearly are very important to the community as well. Thank you. Can I get a motion to accept the report?
So moved.
Leslie Tarkington, seconded. Harry Fisher. Okay. Next, we have item 6. Oh, any objections?
12-0.
1200, okay. Item 6, Treasury Report, again, Pete
The
Menard.
treasurer's report, a couple of numbers that jumped out at me. Actually, in the controller's report, the OPEB returns year-to-date are 9%. Retirement board is less than 1%. So that's striking. I understand there's apples to oranges here, and they have different portfolio mixes, but that jumped out at me, and it's great news for the OPEB Trust Board. Unfortunately, conversely, when you only have a 1% return on the retirement board, one of your biggest numbers in the budget is the ADEC, the actuarially determined employer contribution, which means that notwithstanding smoothing, you've only got one good year in there from 21. Your ADEC is going to creep in and crowd out some of the budget items. There was one more number on the second page. If you look at the second page, this is phenomenal, and you look at the column that says appreciation, we've picked up almost $11.3 million. And some of it's 3 million plus is OPEB, but interest earnings is dramatically increased, thanks to Dan and Natasha Yemitz, the treasurer. So, thanks to the IAC. I mean, it's actually a budget saver this year, the interest income.
Comments, questions?
I move that we accept the treasurer's report.
Okay. Leslie Tarkington, seconded by Harry Fisher. Okay, any objections? Okay, that's accepted by unanimous consent, 1200. Okay, throughout our meeting, we've had a public hearing for the Community Development Block Grant. Can I get a motion to close the public meeting?
So moved.
Leslie Tarkington, a second. Okay, Harry Fisher.
So normally you ask if anybody wishes to be heard on the public hearing?
Well, thank you, Jeff. Does anyone wish to be heard on the public hearing? Okay, can I get a motion to close the public hearing?
So moved.
Leslie Tarkington, Harry Fisher. Any objections? Okay, the public meeting is closed at 7:40. Okay. Item 8, on request for budget adjustment, non-routine application, CD1. Can I get a motion?
So moved.
Leslie Tarkington, second. Harry Fisher. Okay. Any discussion?
Any questions?
Questions? Okay, can I get a motion to, oh, I'm sorry. Laura?
Can I just clarify something earlier? We were talking about the agenda. Was it fiscal '23 or fiscal '24 budget? It appears it's program '23 year budget, but fiscal '24 budget. If we could just clarify that for good form.
Tyler Fairburn from Community Development. It's always a little funky because the CDBG HUD year. Sorry. Good now? Yeah, the CDBG year is 23, but the town fiscal year will be 24. So the year that we're discussing starts July 1st of this year, which I believe is town fiscal year 24.
So just to clarify exactly what Laura said, it's program year 23, it's town fiscal year 24.
Exactly
Thank you
right.
for the clarification. Okay,
Were there any questions?
questions for Tyler?
What was the logic for the first selectman altering the recommendations made by the committee?
Sure. So there were two changes this year. It's unusual. I think it's happened one other time in the 6 of these cycles that I've done. The change on the public service side was for Jewish Family Services. There was some confusion on their end. They had applied for $150,000 for one service activity, which is more than we even have available for all of the service applicants. So I believe the thinking that the advisory committee, the thought process there was that, well, if they need $150,000 to run that program, we don't have it available, so they had it at zero. In discussions with Rachel Kornfeld from JFS afterwards, she explained the confusion and was rather concerned that if they weren't able to get any funding, they might have to not only continue to run the FACTS program, which is one of their more recent programs that started up during COVID to assist families, that if they weren't able to fund the Supermarketing for Seniors program as well, that would also disappear. So the first selectman did not want to see that happen. It'd be sad enough to lose one program, but to lose two would have been, I think, rather devastating for them. So we did allow them to amend their application for the Supermarketing for Seniors program and kind of shuffle some funding from some of the other programs that had already been funded. And then the Housing Authority was the second one that had initially not been recommended to receive funding, but the first selectman found it rather important to support that population. It's 150 elderly seniors at Agnes Morley, and he wanted to at least get some funding there, if not the entire amount.
How much was
The request was for $200,000. The advisory committee's recommendation was zero. The first selectman put $50,000 there. Jewish Families was awarded $5,000 by the first selectman after initially getting zero due to the confusion. $5,000 is the lowest that the committee will recommend.
Sorry, so there was a net increase of 55,000. Where did it come out of?
So for Jewish Family, there was, sorry, it's kind of small type. It was 5 different activities were moved around on the service side.
Sorry, the advisory committee went in with zero but Jewish Family Services got 5.
Yep.
The advisory committee went in for 0 on Housing Authority, but it was given 50 by the first selectman. So that means 55,000 that the advisory committee had allocated or was reduced.
It was moved from other activities.
What were the other activities?
So on the Housing Authority, it went from 0 to 50. 25,000 came from the YWCA recommendation, and 25,000 came from the Family Center's recommendation. So those two, the YW and the Family Center's capital projects were each reduced by 25,000 in order to fund the Housing Authority.
Thank you.
Sure.
Leslie?
And I neglected to ask this question at the Budget Committee meeting, so my apologies. But the Housing Authority, typically their projects are multi-year. They don't always spend them quite as quickly. What is the status? I believe this is a phased project, and they've already gotten some funds for Agnes Morley. I may be incorrect on that, but if you can, do you know any of the specifics about their prior authors or prior recommendations and their status of the project?
Sure. So in 2021, they were awarded $165,000 and changed for the window project at Agnes Morley. They've spent, I believe, $154,000 of that. And then the current year, so we're in CDBG year 22, which ends on June 30th. They were awarded $200,000. They have not spent that yet. They're, I think, wrapping up the 2021 phase before moving on to the 22. And then this will be the third year in a row they've received funding for that project. This will be phase 3.
So there's a chance that they may not have needed the funds this year and could have waited to next year's allotment.
So the way they have proposed the project, it's I think they're starting at the top of the building, the 4th story, and then working their way down. And as they've explained it, it's not it's not standard windows that they can just buy in bulk. They have to kind of go floor by floor and unit by unit and measure them and swap them out. So they have indicated that they do need this now in order to keep funds moving on the project.
Thank you.
David?
So I'm sorry, but if they don't spend the 200 before the end of this fiscal year, that money is forfeited?
It would not be forfeited. The service money has to be spent within the program year, so it has to be spent by June 30th. The capital funding, HUD lets you continue to the following year or several years if need be.
Okay, so these two items that you referenced are both capital numbers.
The Housing Authority project is a capital project. The Jewish Family, 5,000, they will have to spend by June 30th of 2024.
Okay.
Thank you. Any objections to accepting the approval to use and resolution? Okay. Okay. Laura?
Dan, I abstained at the Budget Committee. I'd like to do so again this evening. And just a brief comment, I made it at the Budget Committee. I think this committee does terrific work. It's represented by all 12 districts. And while I understand it's in the purview of the First Selectman to make changes, I'm a little uncomfortable with the capital reallocation.
Any other objections? Okay, so that passes 11-0-1.
Well, I'll
You want to
join
do-
Laura.
Okay, why
Roll
don't we
call.
do a
Let's
roll
do
call?
Yeah.
Can you just confirm who made the motion and it was seconded?
I made the motion, Harry seconded.
Yeah,
Okay.
Leslie Tarkington, Harry Fisher.
Okay.
Normally, you have two separate motions and two separate seconds. Usually, you vote on the dollar amount, and then the second one is on the resolution. Are you going to abstain for both of them?
Okay.
Okay.
Okay, so
So
we'll-
you have to have separate motions?
I thought, I only moved the
The dollar amount.
application, the dollar amount.
correct.
I have not yet moved the resolution.
Correct.
Yeah.
So the dollar amount is $849,858.79 as it appears in the agenda. Okay, can we do roll call?
Yes, Harry,
Yes.
Laura,
Abstain.
Karen,
Yes.
David,
Abstain.
I'm a yes. Dan,
Yes.
Leslie Tarkington?
Yes.
Leslie Moriarty?
Yes?
Jeff Raymer?
Yes.
Bill Drake?
Yes.
Miriam?
Yes.
Stephen?
Yes.
0-2.
Okay, with David Weisbrod and Laura Erickson abstaining. Okay.
So,
Get a motion for the resolution?
Yes.
so I move a resolution by the Board of Estimate and Taxation and passing upon the report and the recommendations of the Budget Committee for the 2024, July 1, 2023 through June 30th, 2024 budget year. And this is the Community Development Block Grant, CDBG, proposed budget for program year 2023.
Do I have a second?
I'll second.
Okay. Motion Leslie Tarkinen, seconded Leslie Moriarty. Discussion. Okay, no discussion. Can we accept this with unanimous consent?
Yes.
Okay. 12-0-0. That resolution passes. Tyler, thank you very much for you and your entire team and for all the good work. Thank you.
Thank you, Tom.
Okay. There are a few building committee reports, and those were sent out by email, included in the packet. So we're not going to discuss those there. No old business. Item 13.
Sorry, would it be in proper order to ask a question on one of the building committee reports?
Fine.
So the Central Middle School, which I just saw this evening, I just wanted to clarify the first paragraph. And I understand, and I'm fully up to speed, the BET rep has requested that Turner provide an option that allow the project to meet its budget. But I just wanted to clarify how this is going to be done. My understanding is there's a conceptual design that is now basically agreed on, and Turner's going to use that to form the basis for a project estimate. And then separately, I think the way this is manifesting itself is you've asked for comparable construction costs in the area, and that would be the driver to get to this number? How do we see this unfolding, just for clarity?
Yes, so that's correct. I think, I don't remember the dates, Laura, exactly. I think the architect SLAM they're working on the conceptual, which I think is May this week sometime. And then the Turner will take that and then develop the full estimate, which is May 24th. And separate from that, I had a conversation with Turner and just directly through the committee and discussed if they could itemize some of the proposed changes, whether proposed estimate, for example, is net zero options, bringing them out, just helping us clearly identify what that estimate is composed of. So if there's a way to bring the project in budget by, looking at some of the inputs, we could do so. So just provide as much transparency as possible. And that's a request. Whether it gets done or not, I don't know. But this was not related to providing comparables.
I understand. So it's really the project estimate with as much detail, as much
detail.
line items as
So we
possible.
can, if we can pull pieces out, we can pull pieces out. If we can't, we can't, right? But
Thank you for the clarification.
Okay.
This may not be appropriate for the meeting, but I'm going to make the request. I believe that when the packet for these meetings are first posted, they are then sometimes subsequently updated with new information, which I would think the public would find confusing, but I could find it confusing. So if I can ask that we talk about what processes we should have. I think once the packet is posted, any changes to the packet need to be separately identified on the website, so it's clear what's new, what's added, what's changed. Because, for example, I did not see the Central Middle School report when I downloaded the packet on last week to make offline.
Yeah, I think we can take that on. I don't think when it comes to building committee, it's certainly, I think it's a fair question. I mean, certainly this isn't the first time that some of the building committee packets have come in, late or it's last. But yes, something we can talk about.
Just a general
Yeah.
process, I think, would be good to clarify.
Great, thank you.
can I just add one comment? I'm sorry, I don't have my own building committee report in front of me, but there was a comment in there that the ed specs would be re-voted upon this Thursday. I believe that is actually incorrect. That was something the Board of Ed rep had said in one of the subcommittee meetings, but I was trying to confirm that earlier just before the meeting, and it looks like that may or may not happen. So just want to clarify that. And if it indeed is, I'll take that out of the report.
Okay, thank you. Okay, item 13, new business, setting of the mill rates. So we have 3 mill rates to set: general fund, sewer maintenance, and sewer improvement. So Roland, can you talk the board through where we are and what we need to do.
The general fund mill rate of 11.393 is unchanged from what the proposed budget was. The sewer improvement of 0.045 is unchanged from the proposed budget. In this scenario here, this shows using $4 million of fund balance in the sewer maintenance mill rate calculation, which would reduce the mill rate from 0.369 to 0.201.
So thanks for that preview. I would suggest that we vote on these one by one. So I believe we need a motion to approve the general fund mill rate of 11.393. Do I have a motion?
moved.
Leslie Tarkington. Do I have a second?
I'll second that.
Larry Fisher. Discussion. Leslie?
I'm not making any motions to change the mill rate, but I do want to highlight how we got to that motion, how we got to that mill rate, and issues that we as a finance board need to be concerned about and look forward in future years. The mill rate is backed into after we use other sources of revenue, one of which is our use of unrestricted fund balance. And this year, the amount of that fund balance we're using to balance the budget is $23.5 million, which is the same as we used last year, but it's at a level that is significantly higher than had been used in prior years before the past two. And it allows us to lower the amount of property taxes that our residents pay. We've been able to do that because our fund balance hasn't really changed, hasn't been reduced over the past few years because we've been the beneficiary of high conveyance taxes in one year and the higher interest rate that Mr. Minarski referred to in his report this year. They're coming in $4 or $5 million over our budget, which helps replenish that fund balance. But our expenses are going to continue to go up, but our use of fund balance is not going to be, or our fund balance is not going to benefit from those kinds of unexplained events moving forward. We have more risks, I think, in terms of unbudgeted use of our funds. It could be Nathaniel Witherill. It could be next year we'll be actually looking at the higher healthcare expenses for our employees. And so as we get to looking at our budget projections for next year, and hopefully we'll move to multi-year planning, I think that we are going to need to carefully look at how much fund balance we can use in our plan. I think it should be evaluated. Our policy needs to be evaluated by our fund balance policy committee, which hasn't met in, I believe it's 3 years now, and we're overdue in our expectation for that work. But it's a risk. It's a risk in our finances as we look going forward. Thank you.
Thank you. I'll just make, I'm sorry, Jeff?
Just one footnote to the points that Mrs. Moriarty made, with which I agree entirely. But when the press and public pick up the fact that the mill rate is increasing by just 1%, I hope that the press and public also understand that the budget actually increased by 3.7%. And that it's some of the benefits that Mrs. Moriarty was describing that has curtailed the out-of-pocket expense to foot it. I don't mind using fund balance now if I have fund balance, and I seem to have, even after the $4 million that we've talked about with Nathaniel Witherill, I seem to have a fund balance of $68 million. And that means to me, in a sense, that there's been a taxation of our taxpayers over the last year or two that has produced some excess funds, and it does seem appropriate to allow those funds back to the taxpayer as some relief in this year. But all the cautions are there. Our budget is up by 3.7%. The out-of-pocket cost is 1%, only because we've had these benefits, and these are benefits that are not so likely to repeat over the years to come. Thank you, Mr. Chairman.
Thank you. I'll just make a couple comments. I certainly do agree that, caution should always be a byword of Finance Board, and I think it's something that we need to think about. We need to think about future risks and opportunities, and there are clearly many of both. I would also kind of concur on the general fund balance. Certainly it's a very healthy fund balance. It's at the top end of our range. And we do, so in that sense, I think it's, what we're using is appropriate. We, of course, know that Nathaniel Witherell will be a challenge, and that's something that we need to address and get it on a sustainable path and strategy. In terms of the, we haven't met, the Policy and General Fund Balance Committee has not met in a few years. I do believe the tradition was that it was typically in the second year of a two-year term, and it's certainly our intent to reconvene that committee. I do believe a couple of years back it went out of sequence a bit. And I would also note that the lower mill rate, the 1% from what we initially budgeted of 2.99%, was not just a function of interest costs, but also, healthcare came in at 8% instead of 12%. So certainly this board did not take specific actions to, reduce the mill rate significantly, but we certainly saw opportunities in both the healthcare expenses and the interest to allow the taxpayers to benefit from some of those favorable developments. And since we did do the guidelines, we also did increase the capital tax levy as well. So those are my comments. And are there any other discussion, or should we go to a vote? Leslie?
Another thing that we did in order to make sure we don't have excess funds in these fund balances, and we're working with the public, is we also moved some capital non-recurring also to help reduce, I think, $4 million of our debt borrowing. So we're looking at all of these, as you point out, on a continuing basis, and these were certainly discussed at the Budget Committee, and these were some actions taken.
So do you want to do a roll call vote on that? Thank you, Nisha.
Yep. Stephen, let me start with you.
Yes.
Miriam?
I abstain.
Yes.
Jeff?
Yes.
Leslie Moriarty?
Yes.
Leslie Tarkington?
Yes.
Dan?
Yes.
I'm a yes. David Weisbrod?
Yes.
Karen?
Yes.
Laura?
Yes.
Harry?
Yes.
1101.
Okay. The general fund mill rate passes 1101. Thank you.
So which one would you like? I'll move the next one. Do you want to do improvement? Or?
Yeah. Next item is the sewer maintenance fund. Do you want to move that,
Or
Leslie?
sewer maintenance? Okay, just a second here. Yes, I'd like to move the sewer maintenance fund tax on the assessment list of October 1st, 2022 for fiscal year 2023, 2024. And that is for a mill rate increase, a mill rate of 0.201.
Point of order, point of order on this, if I may.
Should I also, would you like me to read more? But I would also point out that in order to achieve this mill rate, requires a transfer from the fund balance of the sewer maintenance fund of $4 million. There is a chart in here which outlines that detail, and this information has been prepared by Mr. Geiger and Mr. Minarski, and this is their recommendation. We certainly discussed this.
So normally a
the-
point of
excuse
order
me.
takes
Oh, did I-
precedence over the item that's on the floor. May I be heard on the point of order?
I think it needs to be seconded first. So I'll second, or whatever.
I still persist that the point of order has the right to be heard and be heard first. I'm not sure why the matter is being put before us in a setting in which it already includes the proposal of one of the members to fund it in part with $4 million out of fund balance. Normally, the item comes before us with the funding item and the suggested mill rate. If there's a party present withstanding that wishes to make a motion to do something such as fund it out of fund balance, that normally requires a motion to amend, and that's not what's happened here. What's happened here is that the item has been put forward in principle, already embodying the amendment that's being proposed by one member, and I believe that to be incorrect.
Leslie?
So if this is what the body would like, I withdraw my previous motion, and I would make a motion to transfer $4 million from the sewer maintenance fund balance for its calculation of the underlying sewer maintenance fund mill rate.
I'll second that.
Sorry, it's my day, I think, to be disagreeable. I don't mean to be disagreeable. The item should be placed before us with a motion and a second. And then, once that's before us, in the discussion, it's appropriate for the member that's making this motion to amend to fund with $4 million of transfer, to make that as a motion to amend, which requires a second, and then we would vote on the amendment, and then we would vote on the main item. But right now, I don't have a motion before us proposing this item without the $4,000 transfer. Perhaps Roland could assist us, the $4 million, thank you, sorry. Perhaps Roland could assist us with what the mill rate would be without the transfer.
Okay, so
just so we
that's-
can correct the record.
That's on the previous page. So if what Mr. Raymer is requesting, I now withdraw the last motion. You withdraw your second.
Yes, I withdraw it.
And so I now make a motion for
Pete,
the sewer.
Can we, Pete?
Can you please not use the word transfer? You're simply using fund balance like you did with the general fund.
That's what I
There's no
thought.
transfer. So in the case of the general fund, if you never used it, it would just stay intact. Please, just don't use the word transfer. You're making a motion to use $4 million of fund balance to amend the previous mill rate.
So okay,
so do-
I will do that, but I
Here's-
think what I'm now
what we're saying-
making a
but Leslie, I think
motion,
what we're saying is we're going to,
Motion on the original.
which was the 0.369 mill rate, and then we're going to make a motion to amend it. I believe that's what we're saying. Okay,
0.0.
yeah.
I think I'm making a motion for the
You're moving
No, no.
sewer maintenance fund tax on the assessment list of October for the fiscal year fund of .203. Is
So
that
that was
correct?
fiscal '23. Without the use.
Do I have this for Roland?
Yeah, without.
What is the number, please?
369.
Yeah,
Oh,
Budget book.
yes.
no, I brought that second. .369? Okay, so .369.
I'll second that.
I did run that package.
So
Then you move to amend. that.
Okay, so now I move to amend, including the use of fund balance, to achieve a
$4 million.
mill rate of $4 million to achieve a mill rate of .201.
I'll second that. Jeff?
Well, actually, I don't know if the proponent of the motion has finished her comments on it. Have you finished? Sorry.
Well, we're trying to take a breath here to figure out
I'm
what we
sorry,
do
yeah,
next, Jeff.
yeah, I'm sorry, yeah.
We're waiting for your next instruction.
You're waiting for my next pounce, aren't you? I don't mean to be that way. I'll speak to it if the proponent is done with her comments. So speaking to it, it was raised in our caucus, and I didn't do the underlying homework, but perhaps Roland could assist us. As we looked at the capital plan and the like, we were noting that there seemed to be two substantial projects on the immediate horizon. $10 million for a pump station next year at Cascab. And then I thought for a year elsewhere, there was some updating of other pump stations that didn't identify where, but also at the same rough cost facility of about $10 million. Can I inquire what those items are and where they stand and what the reliability of those figures are?
So may I just mention that this is the town's only remaining pay-as-you-go fund. So each of those projects, no matter what the price, will then be funded with taxpayer dollars with an allocation of 20% of the cost of that project in each and every one of those 5 years. This is a sewer pay-as-you-go fund. The only town remaining, we only need to look at projects that have historically closed out. Roland and Pete have looked at this, Mr. Geiger and Mr. Minarski have reviewed this, and they say that these are from past projects, and there is more than sufficient fund balance. They gave you a chart to show what the fund balance is, what happens after this, and the remaining fund balance,
So,
which leaves plenty of working capital for this fund.
So may I respond, Mr. Chairman, and express what my concern is then?
Sure.
My concern is that if on this pay-as-you-go fund, and that's absolutely correct, I think everything that Mrs. Tarkington has said captures the point exactly. My concern is a little different than hers. My concern is that on a pay-as-you-go fund, I have taxed the taxpayers. I have more than $4 million, but I have these $4 million in hand already taxed. And if I apply it in artificial reduction of the effective mill rate this year, and therefore have to, in a pay-as-you-go, pick the sums up in the following year, and we're not talking about small sums. We're talking about $10 million we start to tax next year, and another 10, it seems, on a different project the year following. I've taken tax dollars already in my hands that I've already charged the taxpayers. I apply them in artificial reduction of the effective tax rate now, and then I immediately pick it up as being extra tax that I have to tax them on the upcoming years. And there's an artificiality to that that seems that I've not been direct, not been transparent with my taxpayers. I've accumulated these funds on a pay-as-you-go fund. We have these projects coming up. I would like to take these $4 million and apply them to the projects that are happening in these immediate years and not use them to the artificial reduction of the tax impact this year. And so if those are the facts, unless there's others that others want to raise to persuade me, my inclination would be to vote against this amendment and not use these $4,000 to reduce tax rate, but to use them to pay for these upcoming funds, which is exactly what they were taxed for.
I think it was 4 million, not 4,000, but Leslie, it's okay, thanks. Leslie?
So again, each of these projects has been taxed for over 5 years for each one of these individual projects. We now find out that each project or some of these projects have come in under the budgeted appropriation. Therefore, we have already overtaxed our taxpayers within the sewer district. And all we are doing is acknowledging that in the future rate that they will pay beginning next July 1st. So we have already overtaxed them, but we're using some of that excess that we've overtaxed them to accommodate this sewer maintenance fund tax in the fiscal year '24.
Okay. I think Laura has a comment, and then I also, Pete, I don't know if there's any more insight or light you can shed on this conversation after Laura. Thank you, Laura.
So just for context, so insofar as I know, the sewer maintenance fund balance had not been used to pay down the mill rate for many years. And last year, we realized that the sewer fund balance, Leslie and I worked together, we identified that there was a large project, the old Greenwich Force Main, that was coming in under budget, and there was available funds. So we worked on that. And I fully acknowledge and appreciate that Roland has scrubbed these numbers, and this proposed use of fund balance are for projects that have been closed out. But I do appreciate Mr. Raymer's point about volatility, because I think one of our jobs as we manage the financial affairs of the town prudently is to try and avoid lumpy, spiky tax rates. And if you look at the capital plan, you'll see that there's a $10 million project for the Coscob pumping station, and the following year, fiscal '26, there's a $12 million project for pump rehabilitation. So my concern is, while we may offer a rebate this year, and frankly, I haven't done the numbers, but, I think the impact on each taxpayer in the sewer district will be fairly de minimis. We run the risk of having an extraordinary spike over the next couple of years because of these two major projects. So given the fact that historically, up until last year, we hadn't made these adjustments, I just would inject a word of caution and support on Mr. Raymer's point, which I think is very valid.
Leslie, did you?
So the only point I'm going to make is I too, as Mr. Raymer and Ms. Erickson know, are fairly fiscally conservative and concerned about the same kind of issues you are raising. But what we haven't addressed is the fact that we also have a very large sewer improvement fund balance. And that one will be a bit more complex, but that should help out next year in terms, and maybe we balance that out next year and the following year in terms of addressing the overall, because as I think anyone who is in the sewer district knows, they receive two sewer taxes, a sewer maintenance and a sewer improvement tax. And those are blended together when we're taxed. So we don't, I'm in this, I pay a sewer tax. I never look at each tax individually, but the blended rate. Right now, the blended rate, if we didn't make this move, the blended sewer tax increases would be up 77%. This substantially reduces that increase. But I agree with you, we have to cautiously look at next year, and I think the point of looking at the following year also makes sense. So, but that's a more complicated conversation, and so to date, we haven't addressed that issue, but it's certainly one that I hope, because of its complication, will be addressed actually within the budget cycle prior to making the budget decisions next year, rather than doing it on the mill rate setting day. I think that it's much more complicated because of the way projects are done in the sewer improvement fund, and needs more work.
Thanks. So Pete, anything, extensive discussion, do you have anything to add, any insight?
I mean, you're just, to Leslie's point, you're reducing a 75% increase, which is volatile, down to a lower number. This basically last year and this year is a catch-up, and what we should be doing is smoothing it going forward. You've got the option of taxing at 0.369 mil reads, versus 0.201. I can understand both sides of the argument, but that's the option that's on the table.
Okay, thank you. I think at this point, can we call the question? This is,
Can I make one other point? One is, is there an option or a better option to split the difference and only use 2 million since you anticipate additional expenses? Or at this point, do we not have the information? I don't think we got the information of what projects are being closed out. Is it all final dollars? I don't know if there's a risk that 4 million may be too big a cut. There wasn't really a lot of background provided.
thank you for the question. For myself, I'm comfortable with the recommendation that we have in front of us.
And let me add, well,
Peter,
the
you-
recommendation was a proposal by one of our members, right? It wasn't the
No,
recommendation.
excuse
from
me,
the
I want to
finance
correct
department.
that. I was, originally, I had a much lower number. It was Pete and Roland's recommendation. I just happened to be giving it because I am a member of this board, not because I was the one who even suggested 2, 3, or 4 million.
Well,
I
I
just
do-
want to make sure you
I do
understand that.
remember it came up on the last day of our budget vote on April 4th, and nobody had had enough
But
information
I think it was
at
at
that
1
time.
million that I mentioned at that time, because as you and Jeff and Laura know, I'm apt to pick more conservatively. And so it's only more recently that Roland and Pete have looked, Mr. Geiger and Mr. Minarski have looked at this, and they have suggested or recommended the 4 million. I have taken that number. I had I was not involved in the selection of it or suggestion of it, just so you know.
I want to make one other point, just, and I don't believe it takes an action of this board, but the grand list number has also modified on the chart. I believe it's showing the updated information, but just to clarify that that's been confirmed is the correct number for the estimated, for the sewer maintenance.
But we don't vote on the grand list. Correct? Yes, we don't, correct. Okay,
Dan,
can we call the question? Oh, no, can we do the roll call?
can I make one comment?
yeah, of
before we
course.
call the question? We have a lot of sophisticated words passing around here, but I think we need to remember in the big picture, this is a successful budget. It funds the town's needs, it funds record capital, and it does it with a very low mill rate increase. And somehow we've heard that described as risk, which would lead to a need to punish the taxpayer with more taxes. That's not risk, it's a success. And the taxpayer deserves to share in it, so we won't be voting with this successful budget to increase taxes.
So can you call,
With that-
can you take the roll?
Yes. Harry? This
So
is-
we're
this is
voting on the motion
is to amend.
to use the 4 million fund balance.
4 million.
My
fund
vote is
balance.
yes.
Laura,
No.
Karen,
Yes.
David,
No.
I'm a yes. Dan,
Yes.
Leslie Tarkington,
Yes.
Leslie Moriarty,
No?
Jeff Framer,
Yes.
Miriam.
Yes.
No.
That's 7-5.
Okay, the motion passes 7-5. Okay, next item is the sewer improvement.
No,
Oh, sorry.
that
Oh,
was an
oh, the
amendment.
res-
Now,
yeah, sorry.
now you have to move as amended, vote
As
on
amended,
the
okay.
motion as amended.
Thank you.
Sorry.
Harry, let me start with you again.
Yes.
Laura,
Yes.
Karen,
Yes.
David,
Yes.
I'm a yes. Dan,
Yes.
Leslie,
Yes.
Leslie Moriarty,
Yes.
Jeff,
Yes.
Bill, Miriam.
Yes.
Stephen.
Yes.
12-0-0.
Okay, thank you. Okay, next item of new business is the setting of the sewer improvement mill rate. Can I get a motion?
Yes, I'll move that.
Question? So there's a resolution, looking over the controller, sorry, a point of order if I can. So we've just approved the dollar figure. Do we have to take a separate vote to approve the resolution that reflects the dollar figure? Not the dollar figure, but the
I think-
percentage?
Technically, you are voting on the resolution.
So the vote
which
that took
contains-
place, you're satisfied, approved not just the dollar figure, but the resolution as well?
Which includes the dollar amount,
Yeah,
yes.
yeah, okay, if you're satisfied, I'm satisfied. Sorry. Thank you, Mr. Chairman.
Thanks for the clarification.
So I'd like to move a resolution for the sewer improvement fund tax on assessment list of October 1st, 2022 for fiscal year 2023-24. And the sewer, so town's improvement, sewer improvement fund for the, for the fiscal year July 1st, 2023-24, repeating myself, of 0.045 mils.
I'll second that. Any discussion? Laura?
So I'm not going to get too far in the weeds here, but on this chart, we do show the fund balance for sewer improvement. We don't show it for the sewer maintenance. But I'm a little confused because if I understood Ms. Tarkington properly, there is some opportunity to use fund balance for sewer improvement next year to have a lower blended rate, but this is showing a negative fund balance. So I'm not going to ask for an explanation. I just want to say I'm a little confused why
think
it's
it's a
negative.
mistake.
Maybe Roland can shed a
Give
little
very
light.
brief. When we started to pay back the bonds for Millbrook and North Miamis, we started to pay them back in 1 year, but because of the lawsuit, the homeowners didn't pay the bonds back until 3 years later. So we have 3 years where we're not paying anymore, and 3 years where we kind of get reimbursed for what we advanced in the first 3 years. That's why it's negative.
The residuum that those landowners owe us.
Yes.
And over what period of time will they
3 years.
repay us, just every year?
3 years.
3 years.
The catch-up will be 3 years. We finished paying, and they have 3 more to go now.
All right, to be continued during the fiscal '25 discussion.
Okay, thank you. Any objections to approving this unanimously?
We should do a roll call vote, just because
Okay,
it's mill,
fine,
right?
okay.
Sure. Stephen,
Yes.
Miriam,
Yes.
Bill,
Yes.
Jeff,
Yes.
Leslie Moriarty,
Yes.
Leslie Tarkington.
Yes.
Dan,
Yes.
I'm a yes. David,
Yes.
Karen,
Yes.
Laura,
Yes.
Harry,
Yes.
12-0-0.
Thank you. Okay, next item in new business, approval of amended bonding resolution by the RTM.
Since the law committee originally did this bonding resolution, I'm going to move that we amend the bonding resolution that we passed, that was amended by the RTM, to the tune of $95,562,333, correct? No?
Minus 950.
Oh, I thought that was the minus 950, I'm sorry.
That's 94,600.
94, give me the number, Roland.
94 million, $212,333.
Okay, so it's,
The number in the packet.
it's 94,212,333.
That's
Well,
not
can you
right.
just take a minute to confirm that?
That's not right.
612.
Issue we had at the RTM, right?
It's 612.
94,612,333, which reflects a $950,000 reduction by the RTM.
I second the motion.
Motion by Karen Fasciotis, second by David Weisbach.
We do just a.
I'm just going to give 1 second, Roland, to. So can you repeat the number, just for absolute clarity?
94,612,000.
Thank you. Okay, can we get any discussion?
Just to add, that's what the RTM approved.
Okay, good.
There was
Let's
some
do roll call.
confusion.
Harry,
Yes.
Laura,
Yes.
Karen,
Yes.
David,
Yes.
I'm a yes, Dan,
Yes.
Leslie,
Yes.
Leslie Moriarty,
Yes.
Jeff,
Yes.
Bill,
Yes.
Miriam,
Yes.
Stephen,
Yes.
1200.
Okay. Next item of new business, review and discussion and vote on the Nathaniel Witherell internal audit by CLA for Medicare and Medicaid cost reporting. Harry, can I get a motion?
Yeah, I would move approval of the assessment services for CLA at a cost of $9,600 as is in the packet dated May 2nd of 2023. I'd move that.
I'll second that.
Okay. Second by Laura Erickson. Quick discussion? Okay, no discussion required. Okay, any questions? Any discussion? Okay. Any objections to approving this by unanimous consent? It was approved by the audit committee. Okay, 1200. $8:30 already, we'll pass on the chair's report. Item 15, approval of BET regular committee meeting minutes of March 27th and 29th. Can we move these together? Okay. So Stephen Selps, do I have a second?
Second.
Leslie Tarkington. Any objections to approving these by unanimous consent? Those pass 1200. Okay. Item 16 is an executive session for Cordic, Town of Greenwich, and will also include the two items that Jeff Raymer added, SC 15 and 19. Just for the public, this is the last item on the agenda, and we are going into executive session. So sometimes we come back out, and, in theory, there could be future action if there's a 2/3 agreement by the board to add an agenda item, but just so everyone aware, this is an executive session, likely the last discussion of the night. Okay.
No, we will be coming out of executive session to vote on two items that were
apologize, the
added
two-
into the
Correct, the two
executive session.
sellers. Thank you, Karen. Yes.
Karen, is it appropriate to add these to the agenda now before we go into executive session?
We already moved them into the agenda now.
They're on the agenda.
They're on the agenda now. We already did that at the beginning of the meeting.
Thank you for the clarification. Okay, can I get a motion to go into executive session?
So moved.
And just so you know, Barbara Schellenberg will be joining us, and so will Amina, so I just texted them to come down.
Okay, so that's Leslie Tarkington, seconded by, my apologies.
Hey, Bill, can you move?
Who seconded the motion?
Leslie
And
Moriarty.
make sure
Leslie
the,
Moriarty, okay. Any objections
sure that's
to go into
turned off
executive
also.
session?
No, but could we take a 3-minute break before we?
Yes.
Thank you.
12:00, yes. And that's at 8:28, we go into executive session.